So welcome to another episode of the mentorship. This episode is actually something that I kind of thought of after it happened, that a lot of people were asking, how did you manage to do that? How were you able to capitalize on that? And I thought this is a very, very good video to make a topic on, which is probably one of the most important things as a trader. So obviously conviction. And conviction, and I was saying this to the members as well, conviction is not a blame, right? Where a lot of people will say, oh, I had conviction, that's why I did this. But maybe they were just gambling, right? When I talk about conviction, I'm not saying it in that sense. It's usually always to do with manipulation, right? And how do we spot manipulation in the market? That is what the aim of today's video is. Manipulation is one of the most important things for us to be able to catch any of the larger moves in the market. Because what the market does is the market is always trying to shake people out, right? You might have had the easiest bias in the week, but people will still end up being shaken out. And that's usually what happens. Everyone has the quote unquote easy move, or thinks that they have the easy move, and no one ends up actually capitalizing on it because the market is extremely and heavily manipulated. By the time the actual move happens, everyone has already lost the trade. So this is what we're going to be going over. How do you spot a manipulation in the market? And usually the market is shaking everyone out. So even like just solely in this whole scenario, over here as well, but this is not the main example. I want to show you this too. In this whole example here, the market is clearly, or was clearly, in bearish order flow, right? So we had been trading lower and lower and lower. What did the market do before actually continuing lower? And everyone is always obviously in this, oh, the market's going to go lower, the market's going to go lower, the market's going to go lower. When did the market actually go lower? After this manipulation over here. By the time this manipulation happened, everyone was scared to even be in the trade anymore, right? But this is how the market works. We executed on this, and the next manipulation that happened, I had also executed on that. So by the time, everyone thinks it's the obvious thing, the market's going to go lower, market's going to go lower, but in that moment, especially if you go to the hourly time frame, no one believed that when price had rushed higher or absolutely flew higher at that moment, that this was actually going to be respected. That's why manipulations catch everyone off guard, but I have trained my eyes to see them. And I'm not just saying this, you guys have watched me do this, especially on the CPI week. I took this live trade, and literally, I'm not even joking, 90% of people, even the people in the chat, were switching buys. People in other memberships were switching buys. I've watched everyone switch buys. But I had said, and the live proof of this is on my YouTube as well. Once this high got taken out, I'd said, I believe this is manipulation for price to trade lower. And what happened was we ended up, sweeping the high, closing lower, and then we traded lower. And I made $6,500 from this trade setup. So when everyone was wrong, I kind of betted on the fact that everyone's going to be wrong. This is the thing about a conviction play and looking at the manipulation, that the market has a very good way of, when the real move happens. Look, the market was moving lower here, right? The market even moved lower here. But when the real move happened, everyone's already out, because right before the big move happened, the market shook everyone out. Then it displaced, and it displaced heavy after that. This was the big move. So essentially, with the manipulation play, you have to look at price taking out highs and then displacing lower, or taking out lows and then displacing higher. And a lot of the time is going to be done in a way where people are not going to expect it to happen. So this specific play was the week of CPI week, and we will go and look at how I managed to take this trade and what we actually did. So if we look at the close from the previous week, and you could see what my thinking actually was. So we went into this week over here, as you could see, and we were thinking, okay, well, obviously we want DXY like as a whole to trade lower, but is it going to trade higher? We have these highs over here. Okay, so as a whole, we always do the weekly analysis, daily analysis first. So if we go on the monthly chart, unfortunately, it's probably going to skip what actually happened for the rest of the month. Yeah, it has. So we'll just go to the weekly then. So on the week, we're looking at price really in a range. Okay, we've got weekly fair value gap, it was respected, and then weekly over here, we'd swept this low, as you could see. And then over here in this candle, we've not taken the weekly highs, we've not taken the weekly lows. So now we're just trading in a range. We want to see some clues first. So going into this week, we didn't have the most solid of biases. We just said, let's let Monday range play out. And as you guys know, in this mentorship, letting Monday range play out is very, very important because it kind of sets a tone for what's going to happen for the rest of the week. If you just let one candle play out, especially the Monday range, which is usually low economic drivers and many other factors, that will make the rest of the week a lot easier. So anyways, we are really saying that price could go lower, price could go higher, and letting Monday in this specific week play out might do us a lot of a big favor really. And we've got this low over here as well. So we just want to see what Monday's actually going to do. And so we play the chart, and I just want to show you guys what happens. Okay, Tuesday, that's fine. So what ends up happening is obviously we have the daily fair value gap in here, right? As a whole, even though price was consolidating, we ended up looking like we're going to respect it, right? So we've got wick, 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 and then obviously over here on the Tuesday as well, price had traded higher. So let me just show you the hourly chart. Okay, so this is what price actually looks like now. And remember all the context as we change all the time frames. What has happened now is Monday has kind of consolidated as we expected. Tuesday swept Monday's high and then started displacing lower. And we also have lows here and lows here and lows here. Now, the next day is CPI. This is classic manipulation. And I'm going to demonstrate and show you guys what trade I've actually taken on this week and what I did. So first of all, I was expecting DXY as a whole to trade lower. Okay, so I'm looking at, I think DXY is going to trade lower from here or at some point in this week. And eventually we're going to go for these sell side targets. That's what I think. We're in bearish order flow. We're eventually going to continue lower on the DXY. That's what my plan is for the week. Now, as I've already showed you guys in the mentorship, we use Euro GBP to understand what we want. And let me just get rid of this because this is drawings from recent times. So anyways, in this whole example as a whole, I'm also looking at Euro GBP kind of bearish, right? So I don't know, Euro GBP trading bearish as a whole, okay? So if I want Euro GBP to trade bearish, I'm expecting Euro to be bearish. This is all we're doing on Euro GBP. What is the current higher time frame trend? If Euro GBP continues lower, right? That means Euro is bearish and pound is bullish. So if I expect DXY sells, right, that means I want Euro USD and GBP USD buys. I want to buy both of them. But what's the better buy? Well, if Euro GBP is weak, that means pound is strong against the Euro, which means GBP USD is the better buy. So with that being said, I have live on this week, and you can go and do this check for proof if you want, go to the Daily Outlooks channel and go to this day of the 11th of February. You'll see the video live. Right. And what I've done is I basically said, okay, I'm happy with GBP USD low of the week. We've swept this low, manipulation over here, and then displacement here. As you guys know, especially if you've watched the other videos, we're not fixating that much on entry. We have a weekly bias in. Now I see GU displace this much from the manipulation. I'm looking at GU. I'm looking at GU to at least now go for these highs, or even higher over here and stuff. But as a whole, this high, I want GU to trade to it. Okay. So what I've done, as you guys always know, not too fixated on the entry. I have just really, as soon as I kind of seen that break with the big 4 hour push displacement, and I want you guys to have a perspective of this because you sometimes don't understand. This is 88 pips of displacement, right? What is the logic now that for the rest of the week, if I'm bullish, I just want another, for the whole rest of the week, I just want another 127 pips of displacement. Okay, and if I'm bearish, and this is what invalidation looks like. If I'm bearish, if price is, for example, all the way here now, price needs to trade 116 pips to invalidate me. And what is the probability? Always comes back to probability and logic. What is the probability price trades 116 pips lower, and then in the same week now trades 130 pips higher, and I'm somehow actually right? This is the point of invalidation. Most likely, if price traded all the way down to here where I put my stop, I actually shaved it a little bit because it's massive, 74, 75 pips, okay? Price trade all the way lower to there, am I going to be right? Probably not. And that is the probabilities and logic of this whole scenario. Now, you guys might say, why didn't you put your entry here? Because it's a 4 hour fair value gap. And I've showed you guys this in the Mastering the Model series, what my kind of philosophy and logic is behind actually this entry model. And it's more the fact that we are not too fixated on entry because this is our model. Swing, bias. If the bias is in, and I believe that this over here was low of the week as I did, right? I didn't believe it was low of the week as soon as it happened. After this bullish, massive bullish displacement on the 4 hour, then another bullish displacement on the 4 hour, 88 pips of displacement now. I'm looking at the DXY. Okay, DXY set this high, DXY is going lower, okay, cool. I'm looking at Euro GBP, well, Euro GBP also looks bearish. So as a whole, pound looks very strong for a buy, and the probability of this being low of the week now and just going for this high as an easy target is very high. That is my opinion on this trade, and that is why I entered. So market entered while I seen price going above here, and I just ended up entering the trade. Maybe I had a bit of a smaller stop loss. I know I had about a 1-to-8 risk to reward ratio, so something like this. What I see this push, I entered the trade, and I just say I'm gonna let this play for the rest of the week, whatever happens. And I knew another thing with the swing model, I knew that tomorrow's CPI, but since I have a large stop loss, as you guys could see, what am I doing? 70.8 pips. I know that even if price does drop lower on CPI, I have a chance to do something about it because my stop is very big. If someone is trading CPI doing something like this, it is so dumb, because even if you're right, cool, but if you're to be wrong, not only you're going to be wrong and lose money, but price is going to slip you and you're going to lose a lot more than you actually wanted to lose. So this is the whole point about the swing model and using it in the weeks where we actually have economic folders, because while everyone else exits the trade or becomes wrong, we can have the correct weekly bias, take advantage of the weekly bias, and usually the economic folder is going to manipulate price towards the draws that we wanted in the first place. That's the whole point of the folders. Pushing volatility into the market, everyone's exited or everyone's moved their stops in a stupid area. the market is targeting liquidity and now everyone's wrong. And sometimes it happens in ways that we don't expect it. But this is why we take the precautions of the large stop loss, choosing the right pair between Euro and GBP, using Euro GBP as I've showed you in this video. And now you're going to see this heavy manipulation. So what happens now, as you guys could see, unfortunately, no, spoiler alert, we hit take profit on the trade. But there's a lot more to it than that. So this is what happens on the initial CPI driver. Price absolutely shoots lower, but you guys don't understand the feeling. Why? Because you are not watching this in a live environment. I did this in a live environment. I had real money on the line. CPI has now pushed lower. And you want to see what DXY looked like? It looked like this. And you should see it in an even more scary situation for you. This is what the DXY 15-minute chart looked like at the time. No one expected that DXY is going to trade lower now. And remember, we wanted DXY sells because obviously that's going to make GBP USD a buy, right? So this is the situation of GBP USD at the time. And as you could see, absolute manipulation, taking out the high. But at this time, do we know that this is a manipulation for sure? Of course we don't. We just seen DXY absolutely push higher. But what I'm looking at now, and this is called intuition conviction. I'm looking at what I've taken. Although DXY has taken out the high, we're looking at GU and we've not taken out the low. Okay, of course we've traded lower, but we've not actually taken out this whole low. We're actually like holding very well. And I'm looking at the 4 hour. We've also traded into the 4 hour fair value gap over here. And that was the point of choosing the strong pair and having a large stop loss at what we'd believe to have been invalidation. So I'm saying, I've watched a lot of people exit the trade. I watched a lot of people now start to sell GU. And I said to myself, this is what the market wants. In a way, look at the market's order flow. The market is, as a whole, trading lower, right? We are, as a whole, if we want to go back to it, in the daily fair value gap, as you could see, right? We were in the daily fair value gap. Everyone believes that the moves happened. And as soon as price has now traded above this high over here, what is everyone saying about the DXY? Buy. I'm watching everyone now say, let's buy DXY. And they're saying, let's do this. DXY is going to trade into here and it's going to continue higher after news. My perspective is different. I think that we've swept this high. And now since everyone's buying, we're actually going to continue the real move and we're going to end up trading lower. So what I did is something completely different. I've actually bought again on GU. And I put my stop loss over here. This is obviously a very conviction play, and I would say don't do this if you don't have the market experience. And secondly, my second position over here is 0.5%. Okay, so I've looked at this manipulation on DXY and I've said to myself, I really believe everyone's selling DXY. Everyone's buying DXY because of this CPI candle. In the moment especially, and you guys can't see, this is hindsight for someone that's not watching this in a live environment, but I did this live. But in the moment price is pushed here, everyone's like, okay, DXY is buying, and they're all starting to sell EU, right? They're like, okay, EU swept this high, right? Let's sell Euro. Everyone's doing this. Let's sell Euro and let's sell GU. And I've started to think, okay, as I said, all of the reasons above, right? Look at DXY, look at the order flow as a whole, bearish order flow, manipulation comes out, and we just wanted to see. And secondly, I'm already in the trade. If I was not already in the trade, perhaps I would have acted a little bit differently. But since I'm in the trade, I'm not going to exit because I've seen a retracement. And I've looked at DXY and I said, you know what? If DXY closes below this high, we probably are going to trade a lot lower. Okay, what ends up happening is, and we just want to play one candle, if that actually lets us. Yeah, it does. So one candle, we played one candle. We've now, on GU, as you guys can see, started to trade higher. And this is, maybe it's here where I start to scale, like something like this, okay? I said, okay, DXY now, and for a lot of people it's early to tell. This is why I've done a smaller risk, 0.5%, but this is called conviction, and I was reading the manipulation over here. So everyone's still buying DXY. A lot of people are now expecting DXY to trade into this hourly fair value gap and then trade higher. I kind of believe in this, we're gonna probably trade into this hour fair value gap and then trade lower and inverse it and continue the bearish move that no one's expecting. And this is the whole point of manipulation. Everyone wanted a bearish move until this happened. Now no one wanted the bearish move. I am still thinking, because the whole market switched consensus, we probably still will get the bearish move, but now no one's in the trade. Apart from, you know, the logic players, the institutions and things like that. And I'm not trying to say I'm on the right side of the market all the time, but I've trained myself to think like this. And there's another example where I'm going to show you this in probably the next video where I've done it again. Exact same thing. I think everyone's wrong, and this is and by the way, this doesn't mean as soon as this happens you just sell, because then you're gambling. You need reasons for this, and secondly, to remind you, I'm already in the trade over here, right? Possibly if this absolute candle push happens over here, we'll think differently, but this is what happened in the trade. I'm being honest about what happened and what I did and how I managed my position. So anyways, this new hourly fair value gap is created, and I kind of think that we're going to inverse this and we'll see what happens. And ends up what's happening is, yes, we inverse the fair value gap, and all of the people that decided to buy in there are incorrect, and then DXY actually makes the real move lower. And as you could see, we traded lower for the rest of the week. And where are we on GU? Yes, over here. And I believe because I'd scaled in over here, I ended up even closing this position a little bit lower. So taking this, I believe, on 3 funded accounts. On one of them, on one funded account, I took 2 positions, and on one funded account, I took 1 position. So on one of them, it was just this initial one, and on the other one, it was this initial one plus the scale in of only 0.5% risk. As soon as we moved up in profit, my new SL is like literally break even. So I'm risking nothing on the second position, and actually the second position had doubled my profit because I understood the conviction of the manipulation play. And everyone, and this is how liquidity works, when this real move happened that we wanted from the daily fair value gap, everyone had already conditioned themselves to believe that they were wrong. They'd switched bias, they lost. I just stayed in the position I was already in, and I kind of said, you know what, this is what the market wants. Market is taking the liquidity that's engineered, and boom, ended up happening. Of course I could have been wrong, but this is how manipulation works. This is exactly how manipulation works, and we will discover more in the next video. I just want to show you quickly proof of the trade. Okay, so I'm back. I'm sure you guys believe me, but just for sake of it, and it's good anyways. Look at the dates over here. I did indeed catch this exact trade live, and you will see at the exact timestamps over here, still holding based off of manipulation, plus GU is holding array. Now I would be looking at the H1 array mark to see how price reacts before making a decision on holding. If we hold hourly fair value gap on DXY and displace, I will look to exit. If not, I will stay in. So just like I just showed you in this video, what I said I was thinking, you might be like, he's just saying that, because this is what I've sent live at that exact time, 3:20 UTC, right? Right at the exact time. And yeah, I'm looking at price manipulating this high, and I want to see what happens in this fair value gap. If we inverse it, I'm staying in the trade. That's what I've told these guys. Now I've said trailing stops to news low and letting it play itself. Just like I told you in the video, I'm not going to come into the mentorship and lie. This is legit. I've made $6,500 from this trade, and it was exactly how I document in this educational video based off of that manipulation over here. entered exactly on GU where I said I did. I scaled exactly where I said I did. And then where everyone was wrong, I watched everyone switch buys. We held it out, boom. Think about this. This is lasting over a day, holding this for hours. This is real patience and psychology. If you're a little victim in this chat and you see price come one candle against you, imagine price going against you, you scaling in based off of everyone being wrong and holding that for a day and then becoming right. And you can't teach these things. This is real conviction, real market experience. And I watched everyone become wrong on this day. And here you go. This is finally the exit. Entry 1, entry 2, exit for both of them. Both of these over here, I ended up closing out around here. $5,200 on this account and $1,200 on this account. $6,500 live from this. And as you can see, it was basically everything that I said in this exact educational video, and these were all the timestamps. So you can go back into the daily market outlooks and look at it for yourself if you'd like. But this is the glamour trade, and this is how we capitalize off of manipulation, or at least play conviction based off of manipulation and understand how it actually works.